right, welcome back to the live Q&A with Miles Franklin. I, of course, am Kevin Hauser, aka Tattoo, here with Andy Scheckman, and today we have a very, very special guest. We like to refer to him as the Wizard. You've heard of the Wolf of Wall Street? Well, this is the Wizard of Wall Street. Eric Elfand, meet everybody here who is watching live.
Nice to meet everybody.
And, of course, Andrew Scheckman.
Good to have you here, Wiz. We talk about you every week, but there are very few people I know that are quite as profound as you and rich in history and in narrative and in storytelling. So we figured you might be able to lend a story or two to our discussion today.
Would be a pleasure.
Well, you want to get us started today, Andy, and tell us a little bit about your week, number one, and then we can get started with Eric and why you brought him here. I think, tell us what it all means.
We brought Eric here in reality to draw a comparison or I guess you could say some sort of a parallel between Eric's past and some of the things that we've been talking about. I think you'll like that a lot. Not to mention, Eric runs a company, private jet service, amongst other businesses, and I think will add color. He adds color to our lives, and I think we'll add color to the discussion as well. Because in reality, a lot of what we talk about, while perhaps foreign to people who aren't digging into alternative media, who are just well-read, perhaps reading and watching the wrong stuff, I think it's universal once you start talking about it.
And I think it's important that since you talk about people reading the wrong stuff, I think it's important that you continue on with what you would generally say.
Shut up, Sean.
No,
right?
That. With the people start reading too much, they'll know.
Yeah, they know little. They'll know more and more about less and less till they know everything about nothing.
There we go.
I think one of the things you should read about is putting that damn cord behind your head because it's sticking out of your ear. Look at you see that?
Well, they can't see it.
Yeah, I see it.
But I will tell you, I think that should maybe be the next tattoo. Also, you feel little by little here. You can put that maybe just along your back.
No.
Well, we'll see.
No. I have ideas for what the next tattoo is going to be. No. Sisyphus.
Jonna, do you want to come on camera? I have lipstick here for you. You sure?
Sisyphus. That is one. The man who it reminds me of my life. The man who was the Greek. What do they call them? They're not heroes. They were called. No, they weren't a god. He was a man who was cursed to push a rock up a hill for eternity, and every time he got to the top, he'd be back at the bottom again. That's kind of, Sisyphus. That's right. That he said it in my ear, but that's right. It is.
But I thought he said something very different.
Sisyphus.
It totally caught me off guard.
No, that's his name, Sisyphus.
I know, but I thought you said something else, and it was.
What do you think I said?
It was, part of.
That's a nice vest you have on today, by the way.
Family.
Oh, syphilis.
Yeah, that's the one I thought.
That was his cousin.
About, which would have been very
different. His cousin. That was Sisyphus'
pushing
cousin.
a rock up a hill and ending up at the same place.
Right. No, you end up at the emergency room.
Well,
sounds like my first marriage.
I will tell you that we have a big day Wednesday coming up.
We do.
We have the Fed meeting. FOMC meeting is going to be announced at 2:00. I guess the big question is whether or not it's going to be a quarter point or half a point.
What does it really mean? Doesn't mean anything.
Well, the real question is what's going to mean to the metals market, and what's your take on it? Because is it priced in already? Do we think
it is priced in? Absolutely, but it's the first time it's in 2025 that we've cut rates, but we're cutting rates into a weak labor market, and so that's what they're doing. They're giving up their dual mandate, so to speak, because they're doing it at the same time as inflation. By the last measurement just the other day, it was 3.1%. Typically, the Fed cuts rates in a weak economy with stocks well below record highs. The only problem with all of this is that stocks are at all-time record highs, in fact, higher than that of the Great Financial Crisis or even the 1929 peak. So in my mind, cuts don't mean stimulus. In this case, they signal recession. When you have U.S. jobless claims that came in at 263,000 last week, those are jobless claims, people who are looking for work, the highest since the pandemic, October 2021. This signals rising layoffs and slowing hiring, but this is on top of the BLS that slashed unemployment figures by 911,000 jobs last month, the largest downgrade revision on history, in history. And so, the bottom line is this is going to benefit not the average person. This will benefit the people who have assets as they are reigniting the inflation engine with their rate of 3.1%, 110 basis points above their stated target. They're waving the white flag on inflation in order to help the labor market. And this is stagflation, and it's fewer jobs, higher prices. It's classic stagflation. So yeah, it's not something that I think will come in as the savior that everyone is looking for it to be. Quite to the contrary. And quite frankly, how low do the rates have to go to make a dent in the unemployment numbers? I don't know. But one of the things that I see happening too is what we saw happening in what we see happening right now in the UK, where they've lowered rates 6 or 7 times already this year, and yet their 30-year Treasury is going the opposite direction. It's almost at all-time highs. So yeah, it's an interesting time to say the least, with core inflation where it is above the long-term target. At the same time, they talk about how great the economy is because we took in $30 billion in tariff revenue this month, yet they spent $345 billion in the month of August. So, with inflation at its highest rate since January, stagflation is no longer a theory. It's here, and lowering rates is only going to make it worse.
Yeah, I think also when we talk about interest rates, it's important, to really look at what real interest rates are. Because I think most people get that wrong when they still think that they're getting 4% on, whether it's a bond or they have a high yielding savings account. It's really not the case. I mean, again, most people think that they're still making money, but on a depreciating dollar, not really making anything on anything.
Well, that's a good point. Let's address that for one moment, because he wants to lower rates ultimately 3 or 4 times this year so that it will be somewhere in the 2% range, right? Well, when you get to a level, first of all, we know the CPI is a CPI, and the Bureau of Labor Statistics, pull out the L, you get what it is, just flat out bullshit, right?
There you go.
And so, okay, most people don't know that the CPI excludes food and energy and housing, and that it is understated by right now about 8%. That's what John Williams of Shadow Stats would say.
It never used to be that way.
Well, yeah, he said measuring it the way that it used to be measured, we're at 11%. But let's just take it at their face value. If the CPI says 3.1% and they lower rates below the stated rate of inflation, the big money will not stand for taking a real loss in real terms. Right now, it's nominal because supposedly you are getting, 4% take off a quarter, or 4.25 take off 25 basis points. You're getting 4% return with 3.1% inflation. Okay, you're making a real net return of 9/10%, which is really crap. But once it gets below the stated rate of inflation, the bond market will revolt. And this is when you see interest rates go much higher as the bond market sells off. The big money will not take a real turn.
Question: historically, Fed lowering the environment, interest rates get lowered. Happened a few times. What happens to metals?
That's a good question. Traditionally, when we see it from 2007 to 2011 was a big rate cycle decline. Gold was up 118%. And from 2020 to 2021, they tried to lower rates. You saw what happened. The 30 and the 10-year went up commensurate with the decrease in the federal funds rate. Gold went up another 35%. So historically, it would do very well. And I would like to add to that point, gold has held up, in fact, gone up in a rising rate environment, which is the antithesis of what one would expect, because gold pays no coupon. So the higher the interest rate, the less incentive it is to hold something that doesn't pay any interest. The fact that gold held up and went up in a rising rate environment, when they switch and pivot to lower rates, it would signal to the big money buying gold, that the Fed has given up on austerity and normalizing their balance sheet, and this is what would put the rocket fuel under gold and silver.
Right, which is what you said, and I always talk about my father-in-law with regarding gold and silver, why he didn't do it, because what was his gripe with it?
Pays no coupon.
Pays no coupon, has no dividends. So gold and silver, the metals are generally, they're non-yielding assets, so that they don't have any income from interest, dividends, or rental payments or anything like that. And the value is just derived from the appreciation, which we've seen in the last year, 40+%, the year before, close to it as well. So when interest rates are higher, there's an opportunity cost to holding those metals. But when you own bonds that generate the interest or stocks or dividends, it's not so much the same type of thing. So I think that it's going to do.
You know what it's going to do? The top 10% of America now holds 93% of the wealth. The bottom 50 holds 2.5% of the total wealth. And this is the issue in and of itself. With lower interest rates, asset prices go higher. So does the cost of living, but you don't care when your assets are going straight up. Where it really hurts the people the most is in the bottom 50% who are trying to put food on the table, gas in their car. Just the basic costs of living are continuing to go higher, and they don't have assets. And their wealth is in dollars, which is losing value 11% this year against a basket of other currencies. But the point is the same thing. It's losing purchasing power against real commodities, real assets like gold.
No, let's get to a couple of questions. It's actually one of my clients here. We have Joyce Hale. Is there an active effort in Congress or the administration to remove the cap gains tax on gold and silver? If so, who is taking the lead on it?
The only one that, to my knowledge, that's ever talked about it is Representative Mooney of West Virginia. I think he's from. He has actually, I thought, floated a proposal. I don't know how much steam it's gotten, but you look at like the state of Florida, where they have removed capital gains on metals if they're used in trade, in
Correct.
Commerce.
Right.
Now that it's a legal tender, in other words, if you are spending it, you aren't paying capital gains. It still is cap gains under the Federal Reserve or under the IRS code, rather. And, look, if gold does find its way back into the monetary system, as I believe and others do, and perhaps backing the Treasury market, that may disappear. But at this point, no, it is still part of the game.
I mean, there's still, I think there's 4 remaining states that charge sales tax on metals. And I think Maryland was just one that reimposed.
And so did Washington State just reimpose it. Minnesota charges it on some things and not on others. Hawaii does. New Mexico does.
Right. And of course, we have the wonderful state of Kentucky, which they repealed it, but the wonderful politician in that state decided to charge it anyway.
Yeah, that's a deal that's being challenged now, and in fact, I think the attorney general is telling people to sue the governor.
Yeah, and not only to sue the governor for exactly what they paid, but also potentially something on top of that as well.
Well, that whenever you are being sued by the government and it's resolved, you owe money, you're also paying taxes and penalties on top of.
So just to get Eric.
It was bipartisan, by the way.
Yeah, just to get Eric kind of filled in. So not many states charge sales tax on metals any longer, but there are a handful. Kentucky, was it last year?
It's money. It shouldn't be.
It's money, but they do. It's unfortunate, but they do. And Kentucky actually had sales tax on it. They repealed it. And then the governor, even though they repealed it and said no more sales tax, they passed it as law. And then the governor came out and said, I don't care what you passed as law. He demanded that the Department of Revenue still charge sales tax on precious metals.
In those states, does that tax affect like the average guy or even wealthier folks? Does it preclude them from buying more because of that?
In a lot of the states, that's a great question, like New York, California, even Florida. But I think they just repealed it in Florida, but many of the states would have no sales tax on metals unless it was under $2,000. And like New York and California have that. So basically they screw the little guy once again, the person who wants to just put a little bit away as often as he or she can, and they are paying sales tax if under that limit.
Each purchase of
It is, and it is contingent on where the metals are actually being delivered. So if they're being delivered into that state,
Or
we must
purchased
charge.
in that
Yeah,
state, like
we,
a coin shop.
right. We must charge sales
So
tax. If
dep-
they are being delivered into a vault that we have that is in a non-sales tax state, such as Utah or one of our other vaulting states, Texas, whatever the case may be, then we don't have to charge sales tax. So it doesn't necessarily preclude them through, but sometimes when clients put purchase orders in and it's $100,000 and you see that the tax that's owed is anywhere from 4 to, like you said, Minnesota has a high sales tax on specific coins. It could be very expensive, and then of course you go $1 million orders, that number becomes quite excessive. So let's get to a couple more questions and then we'll have,
Yep.
I'd like to have Eric tell his story.
Yeah.
So we'll get to it. Let's just get a couple more questions in here. So we have, all right, well, we have a comment by UFO UAP Don. He says gold should be higher than Bitcoin. Gold is backed by gold. Bitcoin is backed by greed.
It's the greater fool theory.
Yeah, well, we
is
talk
what
about
it
it
is.
quite frequently.
It is. But from a standpoint of performance, silver has outperformed everything, including Bitcoin this year. From a standpoint of performance, it's been over a year now, maybe two, where if you measure Bitcoin in gold ounces, gold is outperforming Bitcoin over the last couple of years in measuring it in gold. And many of the things that are very expensive right now, like food, like housing, like tuition, measured in ounces of gold, are actually going down. And that is because it's the value of the dollar that we measure things against that is losing ground so precipitously against other things. So you're right, it should be. But, again, this is one of these deals where gold and silver have outperformed every traditional asset, with the exception of Bitcoin, since its beginning. But that trend has changed actually fairly significantly over the last year and a half to 2 years.
Yeah.
With silver and gold outperforming Bitcoin.
Yeah, and we really haven't gone over too much the GSR, the gold silver ratio. I think over the weekend, forgetting what happened today, because both metals were up again today, I think the GSR stood roughly at around 87, 88. And even though, both metals, but predominantly silver, has made a great run just in the past few months, it's still dirt cheap compared to the GSR.
One of the things, there are some things about silver that I would like to discuss that most people don't talk too much about, but I think it is very, very important to highlight some of the catalysts, if you will, with silver right now. One of which is the reclassification by the U.S. government recently, just reclassified silver as a critical mineral.
Mm-hmm.
And because it is a critical mineral, to me, what that means is that there's a floor now underneath the price of silver. The U.S. government is openly accumulating it. Look at the amount of silver coming into COMEX, and this is well beyond the average speculator. You're talking billions and billions every single month. One of the interesting things about silver going on right now, we talk a lot about the short squeeze in London, where they have the lowest free float amount of silver that they've had in history since they started keeping records. They have less than a day's worth of trading, about 145 million ounces there. And with gold right now, we are seeing what's called open interest. Open interest increasing. That means more people are coming onto the COMEX. You're seeing more and more volume, and the price is going out. Price is breaking out of consolidation. This is the normal link between buying and higher prices. In other words, more people buy, the price goes up. With silver, it's different. The rally is being driven by speculators, but not by speculators, but by a synthetic short squeeze, in my opinion, because the open interest is going down, which means there aren't people buying. The hedge funds are moving away from buying silver right now, yet the price keeps going up. And that is because of the massive amount of deliveries and the little bit of product in the vaults that are able to deliver coming out of London since August. So we've seen 58 million ounces since late August, 10,550 tons year to date coming out of London. This is pointing to physical liquidity shrinking, mounting pressure on the market. So when you talk about the LBMA, data shows that they trade over 600 million ounces of silver per day, and between 1 and 2 billion ounces in paper claims, yet they only have 140 million ounces available to be delivered. What can possibly go wrong?
Yeah.
Yes, Eric.
Question again, forgive the ignorance, coach, but so the same way a stock price can be squeezed up, is that it's the exact same thing here?
Yes, see, these contracts that trade on COMEX, so in London, these contracts, they're trading 600 million ounces of physical silver contracts per day that have their delivery contracts. You can either cash settle, roll them forward, or take delivery. They only have 140 million ounces backing that 600 million ounce stockpile, or that 600 million ounce float.
Yeah,
That's not the
it's
float. The
leverage.
140 million
That's
is the float. The 600 million is the annual trading every
Right.
day, or daily trading every single day. If those contracts, which now amount to almost 2 billion in paper claims, stand for delivery, there's only 140 million ounces there to fill the 2 billion ounces in contract obligations.
So are they forced to buy the actual metal,
Yes.
or they just keep rolling it into a future?
They are forced to buy it. So the LBMA, which is a T+1 settlement, T being trade plus one settlement, the third day the bar should be moving to your account. The Bank of England, most of this year, which runs the LBMA, which is the 140-year-old metal platform, the oldest in the world, said,
Six, 8 weeks.
it's 6 to 8 weeks because we have a shortage of manpower and trucks,
Right.
instead of T+1. So imagine you own a multinational jewelry manufacturing facility. You make and fabricate jewelry, and you buy those contracts to give you the metal you need to make your jewelry. You're expecting it moving in 3 days. Eric, we're sorry, brother. It's going to be 6 to 8 weeks because we're short on trucks. And so this is exactly so. Most of my career contracts, whether it be in London or in New York, never stood for delivery. And that's what we're seeing. The sophisticated traders around the globe says, aha, we see what you're doing by rehypothecating, by creating more paper than there are bars. That's exactly what the Hunt brothers noticed. So very slowly they are standing for delivery. They are exploiting the delivery option, which is creating a massive problem. All of the metal that's come back to the United States, I believe, is to cover short positions by the U.S. banks, because they were clued in on all of this. And they said it was all about tariffs. It ain't about tariffs. It's way bigger than tariffs or arbitrage. They're reshoring and they're covering their shorts, leaving the European banks exposed, naked in the wind. And if you get more and more delivery requests like this, as it is right now, same thing in platinum. In London, they're trading 3 million ounces a day in spot contracts that are deliverable. The head of the Japanese commodity market just came out and said there is zero platinum in Switzerland, there is zero platinum in London, yet they're trading 3 million ounces a day in deliverable contracts.
So, I mean, it's beyond interesting that you bring it up. And I guess my question would be, in your career, since it spanned 36 years, in the history of the COMEX in your career, I mean, now we're talking about for every 1 ounce of physical silver at COMEX, they're writing roughly about, what, 450 ounces?
Or more, yeah.
On paper. I would imagine that number has grown significantly over the course of time, over the last couple of decades. Did it used to be, 1 for 100, like an options contract? One options contract controls 100 shares of stock.
It was always rehypothecated. The difference is no one ever stood for delivery. Never. And maybe 1% or less. And I use the August contract as a good way to explain that. In the first 3 days of the August contract, we saw 2,160 gold contracts post, meaning they post. They're either going to cash settle, roll over, or stand for delivery. With it in mind that my whole career, literally 1% or less stood for delivery. Just that grouping right there, 100%, 2,160,000 ounces, almost 4 billion in gold, stood for delivery. 100% of them stood for delivery. Now that isn't the way that it always goes, but the point of it is that the cash settling of contracts is exposing the rehypothecation. It's, for the first time, it is actually challenging the solvency of the exchange. Now, what's really interesting is that the amount of metal that has come into the COMEX, it's as stuffed as I've ever seen it, but where it is completely and totally exposed is in London. And, there are rumors out there that President Trump is doing this on purpose. Now, the rumor, I can't substantiate it, is that he believes that it is the European aristocrats that were involved in the color revolution, that were involved in the here in the United States, and involved in election integrity questioning, all of these things. And he's trying to stick it to not only the Bank of England, but to the entire European Union as a result of it. And by the actions of it, when you have a half a dozen European banks that are as short as they are for physical metal deliverable contracts, it's an existential threat to some of the biggest banks in the world. And if the banks in the U.S. knew that, because typically what the banks in the U.S. will do, they'll short in New York and then take the commensurate place long in London. Right. So they're bringing back all the metal to cover their shorts. It's now stuffed into the COMEX, that which isn't leaving, because a lot's leaving the exchange.
Yeah.
Who's taking it, where the hell it's going is another question. But the rumor would be that the U.S. banks are trying to go long, whereas the European banks are still short. And if more and more delivery requests come, fireworks would begin, and it would send shockwaves.
I'm going to get to one more question, and then
thing.
I want to have Eric kind of tell his story so that we can.
Does that make sense, though?
Yeah. I mean, you generally don't, but yeah, that's it. You know.
I mean, I know zero about this.
You know, would you like to take his place moving forward?
Well, no, listen. Does it make sense? Sure. As you know, I started buying silver, so short the hell out of it. I'm in.
Yeah, well, the more they short it, the greater the opportunity is to get it, and yet the market keeps on creeping higher.
So my question to you about what you were talking about is, because of that, and you think it's the synthetic short covering, does that change your thought on where do you think silver is going to go in the time frame that it's going to go? I mean, right now we're sitting, I think as we were just getting on here, I saw us, even in the spot market, we're way over 43 now in the futures market, but I think the spot market was just at around 43. So, you know, do you think that that's going to change the momentum of where silver is going right now?
Well, it's quietly moving higher. You know, it's the frog in the pot of boiling water. No one notices that. It's every single day it seems to be moving up.
Well, this morning when I woke up, it was down 18 cents pre-market.
Yep.
And then today we ended up 40 cents.
Yep.
But
That
like
short covering right there.
Yeah.
52 million ounces have already been delivered this month, with 3 weeks left to push the total even higher.
And don't you say that this isn't a big delivery month for silver?
No, it's not.
Right.
And, you know, with silver up 43% for the year, massive deliveries coming in through COMEX. Yes, you want to say something?
No, I was going to just another question. The chart of silver, forget 1 year, 2 year, 5 year,
50 year looks outstanding.
It
is a full
like
parabolic
parabolic.
100%
It is
breakout.
a 45-year cup and handle.
Correct.
Right now, and we are right near the cusp of breaking out. The way that you figure that out is you take the tip of the cup, which would have been 50 in 2011, and the bottom, which would have been just under $4 in whenever that was, early on in my career. That difference is then what you would add on to the breakout, which would be about $46. So projected, if it breaks through 50.96 would be the next target. Here's another thing real quick about London. This is from Bloomberg. First time I've seen this in Bloomberg. Bloomberg confirms the London 1 year implied silver lease rate has blasted above 5%. While on September 4th, the JBMA, the Japanese mark, that's who I was talking about, Bruce Ikemizu, reported a London 1 month lease rate rocketing to an extraordinary 6.4%. Over the past 2 decades, silver lease rates, 1 month, 3 month, and 6 month, have usually hovered well under 1%. Even in tight physical markets, they often spike into the 1%, 1 to 3% range only briefly. Private investors are draining the LBMA vaults, driving lease rates to all-time highs and exposing the fatal shortfall in deliverable physical silver. Hold on. Bullion banks, trapped by their own over-leveraged promissory notes, are unable to deliver physical contracts, may unleash true price discovery and the revaluation of real assets. A 5% lease rate indicates severe tightness in available supply for lending. It's as high as 6.3, tied to physical shortages in London vaults or stress in the forward lease market. This is a big, big deal. And then you add the
that's
U.S.
why I wanted to say, I have a feeling that not everyone out there knows what you're referring to when you talk about lease rates.
Lease rates meaning if you have a short position and you need to cover and you need to get the metal like now, you're going to pay 6% to get it from one of these banks. They don't want to give it up. 6%, you're dead in the water.
So basically, it equates to the same thing as what a brokerage firm in stocks would charge you when you want to short a stock.
Yes.
They charge you a certain amount, and it depends on the volatility of that stock. and the availability of that stock, whether or not it's going to, and those numbers could be astonishing.
So look at the
for
big
those,
picture.
right.
Huge deliveries, lease rates spiking, massive over leverage, and the United States now calling it a critical mineral, putting a floor underneath it. This means that big buyers are entering the market, including the U.S. government.
So, I mean, just out there, we're at 43 now. Do you think that, are we done in the 20s? Will we ever see the 20s again? In your opinion?
No, I mean, I think the 20s
It's
would be crazy,
Yeah.
because in all of the years that I've seen great suppression, they would step on it and it wouldn't come back. There's so much physical demand right now, it just shoots right back up. They haven't had the ability to push it back. And I think, look, given the inflationary and monetary dynamics, I think, look, if I were to say it could go into the $200 zone, if momentum takes over, people would say you're out of your mind. I don't think it's crazy.
No. I listen, you know me. I've been even more, I think, optimistic than you sometimes, especially coming on here. And you don't generally put your predictions on there, where I have no problem in doing so. But I'm saying most people don't even realize that the $30 range with silver was never a highly frequented number for silver. It was back in 1980 with the Hunt brothers, and then back in 11.
Yep.
It was very, very short-lived. I think that the silver spent maybe 2 weeks, if that, in those $30 ranges before it came, crashing down. So this time around, we have built a base in the 30s for months and months and months.
And now they're lowering rates, which will only accelerate it.
I mean, look, I think the only time that I can recall in the very, near past that we've had, that when we fell back into the 20s was when the tariffs were announced. And it was literally, if you look on the chart, it's a blip. And it came down and almost instantly recovered back up. But that actually leads us to Lucas's Brown question. Is there any chance of gold going down to 2,000 an ounce again?
I mean, there's a chance for, you can't say definitively anything, but in my mind, no, because gold is now being remonetized. It is becoming part of the fabric of the new monetary system.
Yeah, I don't think that the central banks that have been accumulating all this gold by, as much as they can, they're not selling it.
That is the key to it all. When the biggest institutional traders in the world, that being Wall Street, starts buying as much gold, bringing it into the country the way they are, you should take notice. When the central banks have been on a buying spree like they have been, you should take notice. And in looking at I mentioned this to you last night, Eric, when you talk about the S&P 500, it's up 1,650 points in the last 5 months, which is one of the strongest rallies ever, or in decades for sure. Gold's up 37 after today, about 38, 39% year to date, which is almost 4 times the S&P's return since 2023. Gold is up 100% versus 67% for the S&P. But this is amongst one of the AI boom, the biggest tech story ever since the internet, and equities are still trailing gold. And I think that what you see are markets and market cheerleaders that are celebrating AI, but gold quietly and silver is telling the real story about where the big money is going, where confidence and capital are moving.
Well, we talked last night again about market caps and the equity markets. And I said, NVIDIA right now has a market cap just about, call it $4.5 trillion. The entire market cap for all of silver stands at roughly, given the fact we've gone up a little bit, but call it 2.3, 2.4 trillion. Gold is, of course, around 22 trillion. Platinum, 300 billion. Palladium, about 200 billion.
Look at you you're like Rain Man.
I'm definitely wearing underwear, though.
Yeah,
definitely wearing underwear.
20 minutes to Wapner. Yeah.
There we go. But when you think about that, one entity, one company in the S&P is $4.5 trillion. If you take really 3 of those companies, if you take NVIDIA, you take Apple, you take either Amazon, Netflix, you're talking about those 3 companies encompassing the entire market cap of all metals.
Yeah, which is just stupid.
All the precious metals.
Something I found interesting now, not getting into the geopolitical side, Poland just enacted Article 4, which is basically it's one step short of Article 5, with NATO coming in to go into war against Russia because of these attack drones that came into their airspace. But that's not what this is about. It's about Poland buying a whole bunch of gold. I want to read something to you. I want to read two things to you, because the second one, when it happened, I made a huge deal about it. For people who haven't heard, I think you'll find it interesting. So this is from investing.com. Poland's central bank announces plans on Wednesday to increase its gold holdings to 30% of its reserve assets, aiming to strengthen its country's financial security. In these difficult times of global turmoil and the search for a new financial order, gold is the only safe investment for state reserves, said NBP Governor Adam Glapiński. He's the head of the Polish bank. He's proposing a motion to the bank's management board about raising its reserve gold target to 30% from 22, would be one of the biggest in the world. But this is the same guy, and I want people to think about this for 1 second. This came from the head of the Polish central bank. He said, and this is when they asked him in 2023, it was in June of 2023, he was asked why they had just bought 15 tons of gold. He says, "We must be prepared for the worst," said Glapiński. When does the central bank gold? Why does the central bank hold gold? Because it retains its value even if someone cuts off the supply to the global financial system. Of course, we do not assume that this will happen, but as the saying goes, fortune favors the prepared, and a central bank must be prepared for the most adverse circumstances. This is why gold has a special place in our currency management process. So, cutting off the supply to the global financial system, what does he mean by that? I guess maybe we'll find out, perhaps, maybe not. But the point of it is, when you have a central banker coming out and pushing back against the current monetary order and saying this is why we own gold, but this is part and parcel of all the central banks buying gold, and now we see the U.S. bringing it in. The biggest money in the world is buying gold and silver, period. The United States is pulling in massive amounts of gold and silver, period. The most sophisticated and well-informed traders in the world are telling you the price. People focus too much on price. Look at the price of gold, how it just keeps on going higher, quietly, breaking through, pulling back, trading in a range, going up, breaking through.
Back and fills.
But it's not doing it in a manner that people have grown accustomed to in this country, where instant gratification isn't fast enough, so they blow it off. Yet here we are at the end of the race so far, the midway point or wherever we are, and the tortoise leads the race.
No doubt about it.
And I think that's why price isn't the important part. What's the biggest money in the world doing? And they're telling you if you pay attention.
And I think, again, it's always coming. It always comes down to, and when I was younger, I never understood it, but it's not a matter of what you have; it's what does it buy you. And I think that's really the biggest difference. We talked about it last week with how much gold it would take to buy a house in 1950, how much gold it would have taken to buy a house in 2000, and how much gold it takes to buy a house now. And over the course of the years, that number has been able to shrink. The amount of gold ounces that it would take to buy a house today is less than it was 20 years ago, and certainly a lot less than it was 50, 75
in
years ago.
1980, the average cost of a new car was $7,600. Today, it's $48,000, 6 times higher. But the government CPI says car prices have only doubled since 1980. Why? CPI makes what's called quality adjustments for features like airbags and cameras. On paper, that looks like less inflation. In reality, you still pay $48,000 to the dealer. Bottom line, inflation feels higher than the official numbers say. I was just reading that in a Financial Times article, but that's the thing, is that we are being lied to. And you're right, gold, if you measure anything in your daily life that you spend on in ounces of gold, it is going down and down and down. The prices are going down. In the dollar, prices are going up. In other words, prices
Correct.
aren't going up, the dollar is going down.
That's right.
Yes.
So with that, I think it's a good kind of break. I think it would be nice to really have Eric kind of tell us his history, his backstory, and how we think it's somewhat relatable to what we'll probably talk about in a little bit after he's done.
Yeah, well, since
we're giving the
why
introduction.
don't you set up, since this is your area of expertise, why we're bringing Eric on, why we think that there is a parallel worth listening to, and his experience coming from Wall Street and coming from a guy who now also understands what we do and has started buying metals himself. After the show, we'll post his address at the bottom in the notes section.
Right.
But
1313 Mockingbird Lane.
yes, that's it.
Yeah, that's good. So as everyone knows, we always talk about being careful and doing your due diligence, especially when it comes to the IRAs. There's a lot of dubious bad actors
Love
out
that
there.
word, dubious.
Dubious. Can we think of one that's even better than a dubious?
You know, someone told me, someone who lives on his street said we talk over each other too much, but that is part of the shtick, yes?
Yeah, no, I by the way, I mean, if they really knew us in real life, they would know that we always talk over each other. I don't think that we've ever not talked over each other.
Do you think people think you have a question mark on your head?
It is Panther National, as we know. We just played it.
What a course.
What a course. I mean, spectacular. It was
Eric was there.
spectacular. Yeah, I know.
I was
playing with him.
Yeah.
It was we were invited as guests. It was spectacular. I'm trying to be on my best behavior so I can hopefully get another invite again.
That would be great.
Brett, I appreciate it.
Yeah, Brett, thank you.
So the reason why we thought it was important to have Eric on here was we definitely have drawn some similarities to, my background used to be in finance as well. I used to be on Wall Street, and I was at Payne Weber and then Raymond James, and there were a lot of companies back in the day that didn't do things quite the same way as Payne Weber did, and not saying that everybody at Payne Weber or Raymond James does everything on the up and up, but in general, there were companies out there, other small little boutique brokerage firms, that they were really out there to basically take advantage of the individual. And we don't think that it's any different than the way that these dealers today are trying to take advantage of these hardworking people in their IRAs. They're really looking to they're predatory to their largest asset outside of their home, typically. And, we're seeing the devastation that can happen from it. So I wanted to bring Eric on here, or Andy wanted to bring Eric on here to draw the similarities between the two, and really what it is, what these companies back in the day did when it comes to stocks.
Other word instead of dubious, maybe nefarious.
Yeah, nefarious. Well, tell us about your background before you figured it out and left. Where were you? Tell us some stories, some fun stories if you can, but see if we can draw the correlation between, doing the right thing or those companies that aren't looking out for you, and maybe signs to look for. Just some cool stories anyway, because I love the stories.
So this is a family environment, so we'll leave some of the stories just,
Yes.
We'll keep that for the golf course. But no, I started off at a brokerage firm that they made a movie about, and young.
What movie was that, by the way?
I believe it was The Wolf of Wall Street. But interesting one. I went to high school. We'll leave firms, big companies' names out of it. Mm-hmm. But this kid, his father was the CEO of a big bank, big on Wall Street, like one that I never would have probably gotten a job at, but got into a training program and after college, so 1992, and I think I was offered like $38,000 a year or something.
That was good.
It was great.
That was good back then.
A lot more than lot more than I signed up for.
Yeah, me too.
But
making $250 a week.
Not even.
Yeah.
Then I got introduced through my mother's friend's daughter. Her best friend was Mr. Belfort's assistant, and I went into his office and.
And for those people who don't know, sorry to interrupt, Jordan Belfort was the character that, what's his name? Leo DiCaprio played.
Yes.
Right. The owner of Stratton.
You'll see him all over the YouTube and the internet, peddling his straight line sales method.
Are you friends with him on the Facebook? Or the Instagram?
I almost saw him. He's actually coming down here.
Yeah.
I believe sooner than later he's got something in the Delray Beach.
We should go watch and sit in front with you.
We could do that.
He does do a lot of speaking engagements.
He does, but a lot of it, again, because of the dubious nature, was overseas. Because if I'm not mistaken, there was a $100 million restitution order that I'm not quite sure he's paid 4 cents from.
Got it.
Of
makes sense.
Anywho, bottom line is there was a guy in his office and he said, called some kid in and said, so-and-so, how much you have in this month? He said, 65. He says, you going to get to par? He's like, yeah. And then he just pointed to me and said, that idiot is going to make 50 grand this month. And I said, in. Now again, what do I know about stocks? This is, 30 something years ago.
This is your
You're a kid.
interview.
This
Yeah.
this was my interview.
You're
I
a
think
kid.
I was a kid.
Yeah, greenhorn, wet behind the ears.
At a $100 or $150 a week cold calling, and then you had to earn your stripes, and to for them to sponsor you to take the Series 7. And I wasn't there long because this was in Lake Success on the island, and I was a Westchester kid, and they were opening another office in Westchester, and that's where they sent me shortly thereafter. And you see things, and I say this personally, I'll take it to my grave. I never did anything that got me in any kind of trouble. My U4 was fairly clean.
Mm-hmm.
And, one thing leads to the next, and you see the money that's out there. Now, again, why we're doing this, because then, or even now, right, where there is huge opportunity, the dubious, the nefarious folks will get involved. And I could speak, I'll fast forward, then go back. A lot of these guys, what they get into, private jet charter, healthcare, Medicare stuff down here. And you hear all about that stuff.
Mm-hmm.
So after all that, I got out. Again, stories we'll keep that off camera, and what does it all mean? But no, but ever since meeting you guys, and I kept saying, like, it is kind of the exact same thing, because I see, matter of fact, in the locker room the other day, what we're watching, I don't know if you were there.
Yeah.
You were probably already eating.
Yeah.
Always.
It was a commercial for $20 gold pieces
Yeah.
from it was telemarketing company that's selling $20 liberties for almost double what we can sell it for.
Right.
But the story was incredible, that's for sure.
Usually is. That's the whole thing. I mean, you're right. I mean, where there is big money, you're always going to find those people to take advantage of it. Now, as a broker, you were at least governed by agency. We had FINRA, we had all NASDAQ at the time. Yeah, go ahead.
No, what did I say to you as well? Back when it wasn't decimals, it was eighths,
Right, fractions.
quarters.
Right.
So the spreads were enormous. And then they went to decimals. So that took care of, got rid of a lot of the dubious, nefarious folk, because it shrunk everything they could make on that spread. Then came what? E-Trade, Ameritrade, Schwab, and all these places that,
$9 for a trade.
That's it.
Yeah.
You were a broker trying to open up a new account, and you were whatever. You started, to relationship, and you say, all right, you buy 1,000 shares of XYZ. It's a $50,000 trade, and the commission is going to be a certain percentage of it. Why would you use a broker? Why would you pay someone a ridiculous percentage for something that you could do for $9? And immediately I'll jump to that guy on TV the other day, and I say celebrity spokesman, or, and I hate to say it, family members of politicians,
Right.
whoever it may be,
Yeah.
at these companies. And again, since I started buying metals, it's like, I don't care if it's a watch, a car, a boat, a plane, whatever it is you're buying. Why would anybody pay 30, 40, 80% of a VIG when, if I'm not mistaken, or should the little I know here, it's a couple of percentage points. So it's like, there's obviously, and all the information, it's fascinating to me, because it's all, it's Chinese to me, but everything you're saying, if you're not involved, it seems like A, you're missing the boat. B, the people that are getting involved, and they're buying these products that are just stupidly overpriced. Penny stocks back when, whether it was Lehman Brothers, Bear Stearns,
Yep.
I can give you a list of 50 different companies. The companies are making a fortune.
Yep.
These gold companies, the people that are out there, and it's, again, fascinating to me how people get duped into buying a product at such a ridiculous.
Well, at least
markup.
you had the ethics
And
to walk away
I
from
did.
the intoxication of that kind of wealth. You wonder what goes through people's minds as they know they are forever altering people's lives by doing these things. And This is why I do these shows. People sometimes they're very cynical because of the world we live in, and they'll say that I'm just talking my book or whatnot. But it's the furthest thing from the truth. I think if I were going to write a book, it would be how to get to the top without being a prick.
Yeah.
You can do the right thing. You can try and run a good business. You can try to value add. But in the end, you're right. You have to charge a fair price. And that's something that we've seen in an industry that's federally non-regulated, are companies that are not.
The thing. That's the biggest thing right here. And I always say to you, I wish to God that this industry would get regulated.
Well, it is for us.
For us, it is, yes. And we'll get to that and why. But I mean, the metals business is a federally non-regulated industry. So when you take something like this, where there is a substantial amount, excuse me, of money to be made. Yeah, I'm okay. I'm just choking on some iced tea. Maybe. Or did you put something in my iced tea? Could have been that.
You'll find out in about an hour.
If I'm not back next Monday, you know what? Well, I'm not going to be here Monday, but I'll be in New York. But because
it's Eric's replacing you anyway.
That's fine. Listen,
you're
switch.
See, you happen to be a far more handsome man than I am.
Well, they say I look like him, but I don't see the resemblance. But that's just where was I? I don't even remember until
the relationship.
I didn't know I just got fired, so I might have stopped talking right now.
Actually, we were at a casino not too long ago with a guy that's 5 years older than Kevin, and the dealer said, "Is that your son?" He meant it too. It was the funniest thing ever.
Payback's a bitch.
Yeah, I know.
Yeah, I'm just saying.
Okay. Where were you?
How about this? Before you say that, the one thing I think a lot of these other companies don't do, right? Where's the relationship? Where's we'll sell you these coins, but I'm pretty damn sure they don't buy them back.
One of the best points that I've heard you, and look at how intuitive you are, because
far smarter than I look.
You are, absolutely. I would agree with that. There are a lot of companies, a lot of them that sell this high-priced garbage and they do not buy it back, or even the places like Costco who are selling it to you very cheap, but they won't buy it back. And if there's a problem with the delivery, you can't even deal with Costco. You've got to deal with someone else. So if there's a problem with what you've received, in essence, it's a good point. And you don't, I think, ever realize how important a relationship is until you have a problem, And
well, that's what we see. And I mean, that's why I think that, what we're doing is so important, because people didn't know. They just saw silver and gold going higher, and they thought that they were making a fortune. Most people, as long as the market's doing well, they don't open their mail and look at their statements, right? They just know that things are going well. They're riding high on it. And when we figured out what was going on, and now when we really get into it, we see that they might buy it back, but the prices at which they're buying it back are, it's egregious in the sense that, we got a higher buyback rate than the companies that sold it to them, and they charge them sometimes 50, 70, 80, 150%.
So how do they make money? The people buying it, they're smoked both ways.
Yeah, but that's the thing. They don't worry about that. That's
the companies that are selling it, they don't worry about it. So the way
that's why they focus on IRAs.
Yeah, it's very simple.
You put it away and leave it there.
A lot of them, I believe. I mean, my belief is that yes, they do it predominantly to elderly people or older people. By the time that anyone realizes it, they're dead. And their kids get it inherited IRAs. And what's the first thing they're going to do? They're going to liquidate. They don't know the difference between what the metal should be and what mom and dad necessarily bought it for, because your purchase price in an IRA is irrelevant. It's just a matter of what comes out is your taxable income.
It's only going to get worse. Do you guys know what a Giffen good is? Giffen, Giffen good.
Was that in Harry Potter?
No.
It's Gryffindor.
Yeah, yes, the same. Very similar.
Silver and gold are what is known as Giffen good, which means that as prices rise, demand increases. There are very few things that are like that. And so as the price goes higher, more and more demand will increase, whether it be industrial demand, whether it be monetary demand, or people who are getting FOMO. Most assets, as they go much higher, they start to lose demand. That is the opposite of this. And so when we see these things, it's only going to get worse. So what do we do? What parallel, Kevin, do you draw from what Eric is saying?
Well, I mean, look, to me, it's identical. There's no two ways about it. Not only that, once once the Stratton opened and people started seeing what was going on and the money and the talks that were, this was going on, then you had people leaving Stratton, starting brother and sister shops, similar or almost identical to what it was, different places. And it's just, they were calling because once somebody might have had a bad opportunity or a bad event at Stratton, maybe they went to another firm that they didn't know too much about. But like I always tell, our clients is the story never changes. The title of the book does.
Yeah, every one of these companies, they all do the same thing. It's like they all came from the Stratton of gold.
Their philosophy is exactly the same. Their policies are exactly the same. I always say, when we do an IRA order, do we make clients go on a recording device and say yes to everything that we're doing?
No.
We don't make our clients say anything. We don't make them record anything.
We don't do that. We recommend they buy items that you can find on every website.
100%. You can go anywhere globally and get rid of every product for the most part that we're putting into an IRA.
Not for the most part, for sure.
Without question.
Yeah.
No two ways about it. They make you, not only do they make you record everything to say, yes, I adhere to the between 19 and 39% spread, which is so weird to begin with because they allow a 19 to 39% spread over cost. But you know what they don't tell you?
What their cost is.
There you go. And you know what they put into their cost? Everything in the kitchen sink.
Eric, what do you think about the fact that gold and silver are assets that are simultaneously no one else's liability? In other words, what you have hidden in your home, which we're going to pass out your address later, you're the only one who has access to it. No one else knows about it, right? What does that mean to you coming from a world of securities where the liquidity is based upon also the solvency of the brokerage too, right?
So with every stock, right, how many people actually take possession of the certificates?
This
Zero.
is the whole concept of David Rogers'
Right.
Web the Great Taking.
Keeping it in the street name.
So you're buying a company, you're buying what? Someone's recommendation, you're buying what could be, what might be. There is something, and I was like, I'm saying liberating is the wrong word, but when I started getting involved, there's something so much more comforting, again, whether it's in your home or being held at one of the vaults, you have something physical.
Right.
Now, the story behind gold, silver, the metals, listening to you, there's so much less, I could say shit, right?
Yeah.
Bullshit involved than a company's earnings. There's a million different things that go into all that. And the price of this, it seems so much simpler. And to me, as I get on in years, I look a little younger than him, but I'm probably not. No, but it's a completely different world that I wish I found 30 years ago.
When you hold gold or silver in your hand, it resonates. Man has been in search of it for 6,000 years. I would argue it's almost in our DNA. And I think the financialization of the world has gotten to a point where gold and silver have fallen out of favor. They say that history doesn't always repeat, but it often rhymes. And here we are 6,000 years after gold and silver were mentioned cumulatively over 700 times in the Bible. We're the most well-informed traders in the world, whether it be across the globe on the central banks. And to me, 10 times more, adding fuel to that argument, the sophisticated traders in the United States who are now bringing it in. We have never been a net importer of gold. And now we are bringing in billions and billions. And now the gold that is coming into the COMEX, the billions, and well over 150 billion since November, is being recorded. A guy that I follow a lot, Vince Lancy, who I think everyone, if you don't read Vince, you have to. He's as smart as they come. He's saying 85% of the metal that's now coming in that is being purchased by the central banks is being bought directly by local and artisanal miners or places around the globe that are able to be brought into private vaults like JP Morgan's vault or whatnot that is not coming into COMEX, that is not being recorded. Suffice it to say, the amount of metal coming into the United States, it's 4 feet of snow on the first tee in the middle of July on our golf course. Now, if you had snowmobiles at home, you wouldn't have them shipped down to Florida from New York or from Minnesota, where mine are, knowing it's an anomaly. What we are seeing is a historical anomaly in every sense of the word. And what I take away from it is that people at that level, if you have that kind of bread, your friends are very powerful. You are circling amongst people who have the information. And all of this metal, they don't do this just for shits and giggles to bring in billions and billions and billions every month. Something bigger is at play here, has been for years with the central banks, and the United States has remained out of it until Trump won the election. And like that, we are now the largest importers in the world. Something bigger than what we are being led to believe, and people focusing on price are missing this. The price will take care of itself. The biggest money in the world always positions before the herd does. They're well positioned before the public says, oh my God, I need to buy gold and silver.
That's the sheep mentality. But, right now, and like you always told me, follow the banks.
It's what it is.
It's 100%. So let's get to a couple of questions.
We've already been an hour, so let's do a couple questions.
Wayne Faulkner wants to know, China is making gold an HQLA asset. Will the U.S. follow?
Well, it is a high quality liquid asset. It's not, there's a very small delineation between high quality liquid asset. God, I just was polished up on this a few weeks ago. One of it has to do with liquidity ratio, and the other has to do with,
like
let me put it to you this way. It doesn't matter. The powers that be do not want it to technically be tier one. It is tier one in terms of its balance sheet. It is not tier one in terms of its liquidity ratio. So they don't want it up there to compete with bonds for the obvious reason, but the central banks are accumulating like it already is. And if you think, what is HQLA? It's common stock and bonds. And so you're talking shit upon shit, right? You're talking things that are going to collapse in a rising interest rate environment. And gold, which is being accumulated at levels no one has ever seen before across the globe by central banks, and now in the U.S., doesn't have that little tweak in definition. Who cares? That is just like everything else they've done that is thrown at it to throw you off the scent. The fact that it is tier one in every other way, to me, doesn't matter. It doesn't matter that it's not a liquidity ratio thing, but it certainly is in terms of their balance sheet.
All right. I appreciate that. Mango George says, I don't see pre-33 being protection from confiscation. If they're going to go that route, they'll take everything.
Maybe not. I mean, it was listed that way before. I mean, if you really wanted to follow the pre-33 legislation, it doesn't exempt pre-33. It exempts dentists with dental gold, jewelers with jewelry, and coin collectors. And it would be an assortment of different dates, mint marks, denominations. It would be St. Gaudens, 20 libs, 10 Indians, 2.5s, 5s. It would be mixing the dates and the mint marks and the denominations so that you are a collector.
But you really do know, and you
desperate governments do desperate things.
And there are people out there that will absolutely.
There are people out there who tell you that, yes, and
fear.
There are people who I like from their information standpoint about that, but to buy it for that reason is stupid. And
correct.
To me, the reason to buy it right now is the premiums are the lowest I've ever seen. And in 2007, when it was already preordained that Obama was going to win the election, as we got close to 08, the premiums on numismatics were so high that for 2.5 years, I flew all around the country. I became Diamond Elite on Delta, flying all to my clients' houses. And I would say something like this. I would say, Eric, I sold you 1,000 MS62 $20 Liberties over the last several years. Gold right now is $1,000. I will pay you a 70% premium over spot for those, where you probably paid a 12 or 15%, because that's how much these older collectible coins were. I'll pay you 70%. And what I'm going to do is I'm going to bring you 1,700 gold eagles to switch. And most of my clients did it. And so I was giving people, depending upon the grade, between 50 and 80% more gold in the form of gold eagles. I would come to someone's house who had high grade stuff, maybe 500 of them, and I would bring them 800-900 gold eagles. It was the smartest, best call I've ever made in my career for the clients.
Oh, yeah.
And so markets move in a pendulum fashion. That was this side of it. Now it has swung back through fair value, and now we're on this side of it. You buy numismatics now, because maybe you have a shot at safety from confiscation. Maybe you don't. You
But
have
also
better
get the
upside
value.
potential. You have a piece of Americana. You have something that is truly unique and special, is 100+ years old. I'd rather own that, period, than anything, if the premiums are commensurate with the value. And in this case, they are way commensurate with the value.
Yeah.
Not, you don't buy it because someone says they're going to take your gold. Even though it does give you a fighting chance, you don't spend huge premiums for rare collectibles for that reason. You're just putting yourself behind the 8 ball.
I like what Kevin DeBella says. He says, "Hi guys, anecdotal data. I'm having friends reach out with questions about buying gold and silver because I'm the guy to ask in our group. We're not wealthy in my friend group. Retail is getting in." Well, listen, I think people are waking up. I think, like Andy said, little by little, people are hearing about what's going on. It's not making the 100% returns overnight like some of these stock IPOs that you'll hear about. But at the end of the day, 6 months later, as those IPOs go from 30 to 120 back down to 16.
You know what the problem was with
gold.
that is that during Silver Squeeze, that's when I moved down here, Florida, in February of 21. The Reddit crowd that was trying to capture the same magic in a bottle that they had with AMC and GameStop.
Yeah.
They got disenfranchised, if you will. They bought it thinking that it's going to go to the moon. You do not buy gold and silver to get wealthy. You buy it because it is wealth. You buy it because, as I always say, it has outlived 2 world wars, German hyperinflation, the Great Depression, every pandemic, everything. And 6,000 years after being mentioned 700 times cumulatively in the Bible, you have the biggest, most well-informed traders in the world gobbling it up and standing for delivery. This is a big thing. When you see 40 countries bring their gold back from the Bank of England and the New York Fed, when you see deliveries coming off the LBMA draining it, when you see a lot of metal come into the COMEX, and yes, the vaults are stuffed, a lot of it stayed there, a lot of it's left. Deliveries and possession, removing counterparty risk, getting out of the system before everyone understands it. At the same time, the NASDAQ is going nuts, right? The S&P going nuts, and yet gold's outperformed it. And where's the media saying, by the way, do you know gold outperformed the S&P and the NASDAQ over the last year? Forget about NVIDIA, forget about all of that. They don't notice it. It is by design. The biggest money in the world is behind this. And who owns every TV station, radio station, newspaper, every magazine, everything in the United States is owned by 4 companies. 4. The information, including through Fox News, is filtered down to the public in a way that they want you to know. This is for national security. And I would argue that all the gold coming in, and probably a lot of the silver, is being accumulated by Treasury Secretary Bessent under the guise of the Exchange Stabilization Fund, where if it's done under the auspice of protecting national security, Congress doesn't need to know about it. That is what I believe is truly happening, because when you have this kind of money coming into the COMEX, if there was any journalistic integrity left in this damn world, it would have been covered on 60 Minutes a long time ago, being like, what's going on with all the gold coming in here? And by the way, the BIS calls it a tier 1 asset, and the central banks and who's buying it all? By the way, do you know the central banks have bought more than any time in history the last 5 years? Not a damn word. All we hear is Bitcoin and NVIDIA and Apple. And who's leaving all of those, the 3 biggest shareholders, board members of NVIDIA have been dumping stock like it's going out of style. Yeah. Bezos has sold almost $7 billion in Amazon since June 1st. The insiders are selling at a 7-to-1 clip. And
not to mention Warren Buffett in the largest cap.
$500 billion in cash. And the retail public right now is fully invested in the equity market more than any time in history ever. The highest amount of leverage ever in margin debt, and the largest exposure to over $1 trillion, and the largest exposure to options ever. So the retail is all in on leverage and margin. And at the same time, the insiders are tiptoeing out. At the opposite end of the spectrum, more money is coming into the COMEX than we've ever seen before, ever, and not a word about it. And it's outperforming the S&P, which has been on a wicked run. And the public wouldn't know a freaking gold coin if it fell on their foot. These are the things you pay attention to, not the price. The price is the greatest tool of misdirection, period. Price misdirects people. But what's happening behind the scenes in an asset that you can control the price through naked shorting. And that's what they've done forever. That's why they trade 400 or 500 pieces of paper for every 1 ounce, so they can control the narrative and keep people from doing exactly what they're doing across the globe. They said, aha, we see what you're doing, right? And that's why if you look at King Kong on Twitter, he says, look, China is doing this too. They're shorting the paper price and then going all around the world and buying things, whether it be in Dorian concentrate from the miners or anything refined they can buy from outlets across the globe that do not change the price like it does on COMEX or LBMA. This is a game, little by little by little, then bang, all at once, you will see something happen that triggers some sort of a delivery failure, some sort of an event where all of a sudden price just gaps up tremendously higher.
It's going to become catastrophic.
Yes.
It will be.
Yes, it will. And I mean that. I'm not saying this shit to suck people in. I've been saying this for years now. And look, the price has gone up and up and up and up and up and up and up since I've been talking about this, but yet no mainstream mention or participation. And that is the stuff you take away. When the biggest money in the world is doing this without the mainstream catching on, that's your clue, period. And now Eric's caught on.
Yeah.
I mean, at that point.
Mitchell Hahn says, Andy, do you buy back what you sell? How far back of spot do you buy back generally?
We always buy what we sell. And for the majority of my career, everything was traded at a premium above spot on sellback. Everything. During the pandemic, I would have paid you $11, $12, $13 over spot for gold eagles, 200 over spot or silver eagles, 200 over for gold eagles, $9 over for junk silver. Most of my career, gold eagles, you would have got between 2 and 3% over the price of gold. Silver eagles, $2.50 over. Everything was over spot. Everything.
Kilos, tens, hundreds.
With the exception of gold kilos, not silver, and gold and silver 1,000-ounce bars, typically traded a few dollars back.
To hazard a guess, there are very few folk out there who do that. Every single one of these other dubious, nefarious folks, you go to sell through them, dead meat.
Yeah, well, right now, the whole market is very soft, which is, again, a contrarian indicator. The exchanges and the main exchange in London is being bled dry. Massive imports, huge buying by the central banks and the commercial banks, and whichever private investors are bringing in billions, and yet everyone's in the stock market. Right. The retail's in the stock market. The retail end here, the dealers are flush with product, which is absolute. Now, what we are seeing are very, very large orders. 7-figure orders every single week, if not every day, that we are seeing. But we're not seeing what we saw during Silver Squeeze, where everyone is calling in and I'll take $2,000 worth. I'll buy $1,500. The volume is not there. And so the dealers, the wholesalers across the United States have far more product than they would like, so premiums are very low. So right now, there are discounts to spot. But I will tell you, God, this Diet Coke.
Which is, by the way, what makes it a tremendous buyer's market right now.
I've never seen it. Yeah. Maybe once or twice in 36 years have I seen premiums below spot on sellback, ever. I mean, it's a very unusual time, truly unusual.
To get back to Mitchell's answer, there is no generality because it is
functional supply and demand.
We can't tell you that in 2 years what we would buy it back for. There's no percentage because we don't know what premiums are going to be. It's not just as simple as that. What we're talking about with the dubious firms is they might charge you 80% over spot or melt, but when it comes time to sell, no matter what the market's doing on premiums, they're going to still be well below where they should be.
I'll put it to you this way: I'm embarrassed telling people what premiums are because I think they think it's us doing
me too.
it. It's not us. It's the market makers, which are the primary distributors one step above us.
Yeah.
They're the ones who they're the ones who buy all the allocations from the mints. And if there's more demand for that stuff and they run out, the mints run out, which they typically do. And during the pandemic, they constantly did. Then the primary distributors who have, $1 billion in inventory, when they're getting everyone asking them for product, they raise the premiums sky high, both buy and sell. So my whole career, premium was a function of production and distribution, and we always paid a premium to spot because we would buy it at a small premium to spot. We'll buy it back for a small premium to spot, maybe a little bit less than what we can buy brand new stuff for. but it's become more than that. It's become a function of supply and demand more than anything. And I think that ultimately, when the public catches on, premiums will be far, far, far ahead of spot. And this is one of the reasons to buy physical over ETFs. During the pandemic, with $11, $12 premiums for Silver Eagles, 7 or 8 for Maple Leafs, 4 or 5 for 100-ounce bars, you would have got spot or behind a slight discount to it on SLV or GLD, as they take the percentage of money to run the fund out of the stockpile. So it's always slightly below what it's supposed to be.
Yeah, I had a client yesterday that unfortunately got involved in one of these dubious players. And he was so disgusted. He got their buyback. It was actually lower than what I would have been able to offer him. I said, you can go back and try and see if they're going to give you any more. He said, I don't ever want to speak to these people again. Buy it all back from me. Let's start over. Let's get the quality stuff. And that was it.
I want you to also say, because remember, we do not mandate, when we help people we do not mandate that they buy anything from us, correct? You're doing this on the come. You're doing it. If you do a good job and they want to buy, hopefully they do from you, but you don't tell them as a condition of their help that they need to buy back from
everything is 100% unconditional. When we try and help people, we try and give them the information so that they can go out, speak to the people intelligently so that they know what they're talking about, because 95% of the time when they got sold these metals, they were completely ignorant to how it works. And that's why they got into the situation that they're in. It's not until listening to you and to a lot of the other, podcasts relating to metals and then to us that they learned about what happened to them. And they kind of like the light bulb went off. Wait a minute, I own some 1/4 ounce gold and some 1 1/4 ounce silver. No, there's never conditions. It's always a matter of these people, I think, made the right choice. And I say it all the time. They bet on the right horse. They bet on the wrong jockey. And that's where we're sitting now. So, if they want to stay in metals, which 95% of the people do, they want to be in metals. They just don't want to be in the junk stuff that no dealer wants to buy back. And if they are going to buy it back, it's going to be so well under spot that, they're the ones that are making money, but the people that are selling it to them aren't.
Do you still jockey horses? Do you still ride horses he does, doesn't he?
No, I grew up a little bit. So they cut me out. I was too tall.
Were you going to say the same thing?
I didn't want to.
I'm
just
I know that could
when he said jockey, I'm thinking to myself, jockey, he's the height of a jockey. I mean,
Oh boy, I don't know why I do this.
But the jockeys wear vests too. They do, with numbers on the back.
Jackets, not vests.
I think it's a vest.
I think it's a jacket. Maybe it's a shirt.
That's a jacket.
No, this is a vest.
That's a jacket without arms.
Which is what we call a vest. Yeah.
I saw
in Philadelphia, it's $50.
It was either your wife sent it to us, to my wife and I, or you did. Your beautiful assortment of vests in your closet. I've never seen
it. Was probably my wife.
There's like 40 of them.
We probably have quite a number. It's a bunch, but you know what I don't have?
It's coming. We're gonna make you something special.
Do we know what we're gonna say? We do not have the Miles Franklin vest, which, we get a lot of comments on how come you don't have Miles Franklin vest? And I can't give them an answer. I'm waiting. What does it all mean?
Just think how much more you would have spent if you had all those jackets and you had to pay for the arms.
A lot more.
What a savings you've made.
Listen, thank God.
Your wife put it into purses.
Thank God that it's true. Thank God we live in Florida. That way I don't have to worry about the jackets. So, all right, we're at 118.
Sweating watching you in that.
I'm very comfortable here. I mean, I am very comfortable.
So jockeys wear satin.
You wear satin underwear.
I don't have a satin vest.
Just underwear.
I don't. We don't talk about
out.
Secrets. Not in.
All right, a couple more questions and we'll head out.
Let's see. We got John. Did you put any more in there?
Oh gosh, there's 27. I stopped putting them in there, but there's 27.
All right. Well, let me see. Let me go to some of the comments, the recent comments, because there'll probably be something in there. Let's see.
There's nothing in the recent comments. Just go ask a question.
Would it be wise to buy a house with gold right now? Penny Ashburn asks.
Well, if you look at the trend in real estate and gold is moving in your favor. We talk about in 20 years ago, 2005, the average price of gold was $455. The price of a house was $240,000. So let's do the math. I remember this because we talked about this last week, Penny. Sorry, hang on one second. So we have $240,000 divided by 455. That's 527 ounces of gold. 20 years ago, the price has almost doubled. The price of a house now is about 420 from 240. So it's almost a double. Your dollar has depreciated against real estate, but the 527 ounces today is worth almost $2 million, would buy you 5 houses. So the answer would be no, I would not. Now, you have, a home, if it's to live, that's different. It's mitigated by the fact that borrowing costs are much higher than they used to be. So look, gold isn't just for an emergency, it's also for opportunities. So yes, you could, but my feeling is that gold will continue to outpace real estate. And what we've seen recently, as they lower the federal funds rate, just like we're seeing in England, the back end of the yield curve goes higher, which would be the 10-year and the 30-year. In other words, those are the things more tied to the real estate market. So I might wait a little bit. If you are all in, you've already decided to buy it, then yeah, that's what it's there for. But it is moving in favor of gold over real estate.
I like this. Clarence Gardner writes.
Clarence, my good man, I love Clarence.
There you go, Clarence. What an old timer like me might say dubious equals questionable. The youngins now would say sketchy.
You know what Clarence says? Clarence says that this is going the wrong way. You know why? Because
it reverses the.
That's what I said.
Yeah.
Too.
It reverses the screen.
Yeah, that's what Clarence, my wife, said the same thing. You're not just a handsome face.
No, I said the same thing to Michelle. I want it going the other way, but because we couldn't get it to go the other way with the scroll, the line.
Clarence is a good man. I've talked to Clarence maybe more than any client. I talk to Clarence usually once to twice a week. And I love you, Clarence. Next time I'm in New Hampshire, you're down here, dinner on me, my man.
I have two more things to say.
Yes.
When I saw the vest tonight, I said, you know what? There's a UPS driver running around with a vest. That's number one. Number two, now I'm serious. You mentioned something about Costco and gold. I couldn't imagine in a million years buying anything at Costco, but when you do buy like a jar of peanuts or something, whatever it is that's just off, they take back everything like that. Do they do that with gold?
No, they won't.
Once you buy gold, it is done. You are limited generally to, I believe it's 3 pieces. And when it's done, it is done. There is no returns, no exchanges, no nothing. That is it.
And they take back everything.
Yeah, I think it's a security thing. I don't know. I mean, I don't know what they do with their jewelry and stuff. I'm sure. I don't know. It's because I don't know what. It's dropped. I know who it's drop shipped from. It's one of the largest distributors in the world in New York City. And so I think that New York City, get a rope. Remember that commercial for it was for Pace salsa. This salsa's made in New York City. Get a rope.
New York City.
Oh, look, you actually do exist. Why don't you come say hi?
Yeah, lipstick. Let's go. John wants to know what's happening with the new exchanges opening. And I'm guessing it's
Saudi Arabia. It's
Russia,
being constructed. St. Petersburg. It is being finalized. Singapore,
they're
same
coming,
thing.
And it's not going to be the same pricing as what we see
here.
And
they're all being built primarily to settle, and they're all going to trade over Enbridge in local currencies, as we've discussed ad nauseum, outside the purview of the SWIFT system, and settle imbalances in gold held in a series of multi-jurisdictional vaults. So you will hear, I will talk all about them as they are completed. The first one was built in Hong Kong. It's done. The second one is underway in Saudi Arabia right now.
So we got one more, and then I think we'll go. Echo Leaf said, would you still buy gold at these prices?
Absolutely.
And I will say unequivocally, yes. And words from a wise, although I don't think he's that wise anymore because he's been a little condescending tonight, but that's fine.
I'm always condescending to you on this show.
Those that hold cash are destined to go broke.
Where have I heard that before?
So that being said, regardless of what the price is today,
not irregardless,
or supposedly, but where else are you going to put your money? If the dollar is a depreciating asset and gold has shown and been proven to continue to rise in all these various
The
different
same
environments.
people who said that now,
Yeah.
with all due respect to this fine young man, were saying it at 2000.
Yeah.
And they were saying it at 900 when at 950 when it broke through 1,000. And I will say this to you. If there's one thing that I have learned unequivocally in 36 years about markets, and there are very few things you can say definitively, is that bull markets go higher than anyone ever thinks possible, and bear markets fall further than anyone ever thinks possible. When I started in this industry in late 1989, the Dow Jones was 2,100. And here we are, it's gone up 20 plus times. At the same time, the Japanese Nikkei was 40,000. They owned Rockefeller Center, Pebble Beach. They made anything with a motherboard or an engine better than we did. They were taking over the world, and they just recently surpassed where it was. It's taken a generation for the market to come back, 35 years for it to get back to where it was when it crashed in the early 90s. So I don't know. The point of it is that I don't think we've seen anything yet. And all of this is happening without virtually any retail participation. It's being driven by the big boys and girls, those who have all of the information and lots of money. So we haven't even begun to see where it goes. And that discounts the fact that I, in my heart, believe, and I was saying this for almost a year now, that gold will be revalued. The Federal Reserve just wrote a report on revaluing gold. Senator Lummis from Wyoming passed sending out a bill to revalue gold, albeit to take some of the proceeds to buy the strategic Bitcoin account. But you are hearing over and over and over more and more talks of gold revaluation, which is what? Dollar devaluation. What does Stephen Mirren, the author of the Mar-a-Lago Accord, who is now on the Federal Reserve Board, want? A devalued dollar. How do you sell manufacturing again? You devalue the dollar. We are going to see a devalued dollar. We will see gold revaluation. And when you see the biggest money in the world and in the United States doing these things and saying these things, they are crumbs. You can choose to follow the path like Hansel and Gretel did, or you end up at the witch's house like Hansel and Gretel did. So, you know, it's which path do you take? Either you follow the crumbs and get back home, or you don't.
I just got a text from one of my clients who last week told me he wanted to put a bunch more money into his IRA.
He waited.
And he said that he wanted to see a dip.
You told me that.
Yeah.
You told me that when we were in the car the other day.
And he just texted me and said,
I'm
still
that
waiting
guy
for that dip. And he said, didn't work out that well today with an emoji like this.
But it's going to
I don't listen, we always say
that's cost averaging. You smooth out uncertainty.
And at the end of the day, because I know he's definitely
what does it all
buy
mean?
silver. No, he's looking to buy silver, I think, predominantly. But my point is, does it matter? I mean, realistically,
Richard Russell always said it's a number of ounces at the end. You won't even remember what you paid.
And that's exactly it. Whether you paid 39 or 42, the only thing that I can say is now I know him. The fact that we're at 43, it's going to be so difficult for him. He's going to want to be waiting for 38. But now when it goes to 47, he's going to wish he got in at 42, but he won't.
And then he'll buy at 47 and it'll pull back 20%,
right.
And he'll call you and he'll be very angry. And then it'll go, and then you'll say, relax, it'll go much higher, and bang, it'll go higher.
Right. And by the way, I don't even see that there's a rational reason, and it could happen, who knows? But I mean, I personally don't see a 20% retracement.
There's a 1 billion ounce structural deficit over the last 5 years. It's not going anywhere.
And
oh my God, who does that sound like?
And if we hit 50, we are then now in uncharted territory. And at that point, then I can say, as my wizard friend here would say, what does it all mean?
That's when the cup and handle takes over, and then you're looking at $100.
And then there's virtually nothing. I mean, zero from a technical level to stop that from going.
Technical level says that you go to $96. Correct. That would be the distance between the bottom of the cup and the top of the cup added to the breakout, which would be $46.
And then
then
you couple that with additional short covering. It could be nuts. So,
the short covering at that point would blow some of the biggest banks out of the water.
Yeah. Do you know whether or not when we were away, remember that was it JP Morgan that put that short on for $500 million?
Yes. I don't know if it ever got covered, but here's one last thing that I don't think Eric knows.
Sir.
One of the primary reasons that Bear Stearns went bankrupt was because they were short silver. And it went from $9 to $21. Now, the reason I know this, I'll tell this last story and then we'll be done. I did an interview, or Chris Marcus from Arcadia Economics had, and so also Bart Chilton gave 2 interviews, one to Chris and one to Andrew Maguire. They're both the same interview. And he said, and right when he gave this to Chris Marcus, before I tell you the interview, what was said, he gave this interview to Chris Marcus, and then he died roughly a week later. Now, they say it was natural causes, but who knows? Here's why I say that. Bart Chilton was the former head of the CFTC, the Commodity Futures Trading Commission, the commodity cops, right? And he came on both of these interviews that were given within a few days of each other, and he said, this is what happened. He said, Bear Stearns went bankrupt for various reasons, but largely because they had the largest short position on COMEX ever seen in silver. And it went to $21. They got squeezed. And Jamie Dimon was called into Ben Bernanke and Hank Paulson's office. He's saying this. You go Google Andrew Maguire, Bart Chilton, or Chris Marcus, Bart Chilton, and you'll see what I'm saying. But he was brought into the office, and they said to him, Jamie, we need you to take over Bear Stearns short position. And he said, okay, guys, I'll do it, but I'll be in violation of position limits. That's fine. Get your house in order. You have like 90 days to do it, whatever. Get it done, and that's cool. Great. So off he goes. At the end of the 90 days, or whatever the time frame was, Bart Chilton went into his superior's office. Now, that would have been the Treasury Secretary, which would have been Hank Paulson. And he said, they are in violation not only of our agreement, but in terms of antitrust law, they've actually increased their short position. They need to be prosecuted. And he said, I was told, Bart, back down. It's a political decision. He died a week later or thereabouts. Now, I may be off on my time a slight bit, but the point of it is, and maybe it was natural causes, but he spoke out against the JP Morgan, against the Treasury Department, and against the Federal Reserve, who in essence was saying, do not go after them, even though they violated our agreement. They're shorting the price of metal for a reason. It's a political decision. They let it go. So when you talk about how could this be an existential threat to some of these banks in Europe that are massively short in London, you get a big enough delivery rush and a big enough squeeze in the price, and bang, these banks don't just deal in precious metals. These are banks that deal in every single thing. Now you're talking contagion. Mm-hmm. God only knows what would happen. This is why there are a lot of people who say that the silver and gold short position is the Achilles heel of the West, and the Chinese understand it. This is why they are slowly draining the vaults and standing for delivery and buying everything across the globe that isn't nailed down before it goes bang. And they will have it all in their possession by then. And then price moves to those exchanges that you and this person was talking about, where price setting will be a cash and carry market. No more futures, no more forward anything in the West. It will be about what's it worth for me to buy it and take it now.
So remember I told you, remember that lovely woman that we met, Nancy, my client?
Yes,
over at the
she
club?
was lovely, by the way.
Lovely. And I told you a couple weeks ago, we liquidated a decent amount of money that she had bought metal for her son. He had made enough on that money to afford to buy him his first house.
Right.
Now, she called me today. We did a liquidation. Her daughter made enough money today that we liquidated.
So let's contrast that to the question that was asked.
Yeah.
If she would have used that money to buy the two houses back then, it wouldn't have worked. Correct. In other words, gold is appreciating against real estate and appreciating against a devalued dollar. 1,000%. Hold on as long as you can. You will find a better house. And besides, you have, baby boomers getting older. People want to get out of their houses. They feel trapped.
Yeah.
Prices are going to come down in real estate. It's the only way to make housing more affordable is for prices to come down, not by lowering interest rates so young people can get more indebted. And that isn't the way. It was the low interest rates that got us in this problem to begin with. Yes, Mike.
Perhaps another ignorant question, because I have a lot of them, like he has vests. Do people, is the product out there? Does it exist? Do people take money, borrow money against the metals that they hold?
We used to do that. We don't any longer because it is a gray area for a company like mine, although we are partnering with Battle Bank, which you don't know what that is, but it is run by a good friend of mine named Rick Rule, and they are a bank that will do just that, and they have set up relationships with us in all of our Brinks facilities. So if a client had $1 million worth of gold in the Brinks facility, it would stay within the vault. It would be moved over to an escrow account held by, in the name of Battle Bank, who would lend them, I believe, up to 70% loan to value. And as long as the price doesn't fall by 30%, giving them a margin call, yes, there are those that do it.
But we're not exclusive to Battle.
No, we're not, and we're not. But we used to do it ourselves, and we were advised that you might want to rethink this because of lending laws are very different from state to state.
Correct.
And you don't want to get into trouble.
Licenses in order to actually do so. So Andy took the initiative.
I just said forget it.
To stop it. But yes, there are some companies that do it. But as Andy said, Rick Rule, we were at the conference. Battle was one of the big sponsors there. They'll probably be the 800-pound gorilla in that industry without a doubt. And I think everything that Rick touches turns literally to gold. He's brilliant.
We never called. Jason, I'm going to call him tomorrow. Jason, if you're watching, I'm calling you tomorrow, dude.
But by the way, our guy that we met, that we had dinner with, that wants to potentially do something, said that we potentially could have a call with the CEO within the week.
Well, we should.
Yes, that would be fun.
I think you should fly us out privately.
Yes. John, do you want to come on first? Okay. John.
Eric, thanks for coming on, man. You know, you're if people could really hear the true stories of what it was like to be there back then, I'm sure many would like it. But the point is that you saw it, you realized it, you left, and now you're telling us what it's all about, and the correlation that we see with things that are happening in this industry, to me, are very stark.
Yeah.
And
So
please
go ahead.
I was going to say, I'll leave it at this. Prior to knowing much about this, and obviously before meeting you guys, this is all about the relationship. It's about the service. It's about, and I know what's out there. You guys, you are. I don't think there's anyone else to compare it to. Your prices are cheaper. You have better service and the reliability. And poke around on the Google and look at, whether it be a Better Business Bureau or complaints made against other companies.
0.
Yeah, that's unbelievable.
Yeah, no, listen, that's
unbelievable
to be extremely proud of. I mean,
yeah,
without
you
a
doubt.
Should be. No question.
Shouldn't be proud of your vests.
I'm still very proud of my vests. I'm very proud. I'm okay. I'm just not proud of the Miles Franklin vest that I don't have. That's the only one. And John, I'm not giving you any shit for it. I'm only giving Andy shit.
John, we need to get him a Miles Franklin vest.
All right, let me go over specials for the week. I think there's 3
Are you here?
of them. No, she's
Are you
playing.
dead?
I think she's playing.
Yeah, I think she's actually sitting there dead.
Yeah. Do we have to worry about her?
Maybe.
We have 1 10th-ounce gold maples, $37.50 over melt. We have 1 ounce silver Engelhard Prospector rounds, which are actually very cool. Not a lot of those are
They're rare as
$2.99 over spot. And we have 1 ounce silver assorted bars, dealer choice, $165 over spot. Again, I am Kevin Hauser here with Andy Sheckman and Eric Elfand. I want to thank everyone for stopping by.
The Wizard, aka
The Wizard, The Wiz. I want to thank everyone for coming by. I will not be here on Monday. We are traveling to New York, so we will be back 2 weeks from today. And I believe, I think we'll be back then.
Then we'll do live from Aruba.
Oh, yes. And then we are doing a trip that we will go live.
You should have come.
From there.
What the hell, dude?
Yeah.
There's still time.
There is.
What does it all mean?
No, there might
need
be,
this
there might be an opportunity. We'll talk about it off camera. But in any case, Victor, thank you for everything as always. Subscribe, smash that like button. Tune in 2 weeks. We will see you then.
We will.
Thank you for coming.
God bless.
God bless.